Welcome to this video. Today we're going to talk about PayPal, one of the largest online payment service companies out there. But in the last few years they faced a lot of competitions from Google Pay, Apple Pay and many other fintech companies. But do the numbers reflect the same? Should you buy or should you sell? Let's find out in this video. So how does PayPal make money? They focus on consumers and they make money also from other businesses. In their consumer sector, they make it possible for you to pay PayPal on many websites where PayPal is available, of course, and they store your credit card information, and so you can pay instantly. You don't have to fill in your information again. It's similar to Apple Pay. They also make it possible to send money between users, and they make money through fees. They also have their business sector. So many companies, they want to make the PayPal infrastructure available on their website because they know PayPal has over 300 million users, and they also have like a brand recognition. It's a strong business model, but they face there are a lot of competitors who are doing similar things. So because of negative sentiment and competitors, PayPal has declined a lot in the last few years, over 77% from all-time highs, and it's now trading around $70. So I made an economic mode analyzer to find out how well it's protected against competition. How strong is PayPal's mode? Well, let's find out. We type in PayPal here, and we can press here PayPal holdings, and we analyze the mode. And we can see that it is a narrow mode, so an overall mode score 6 out of 10, which is not like really high. It's not like Google or Nvidia or Microsoft, but it's okay. It's decent. They were one of the earliest to be in this business, so they have a brand recognition. There are some risks like competition from Apple Pay, Google Pay, banks, and other fintechs. I think this is like one of the biggest risks, and they are dependent on e-commerce growth. Yeah, so they make the most of the money they make because they make agreements with other big companies, what we talked about before. So they other e-commerce companies, they allow PayPal infrastructure on their websites, and they will pay PayPal for that. So let's look at the financials of PayPal. We are here on Guru Focus. The financial strength is a 6 out of 10. They have more debt like recently. So that's something, so they're borrowing money, which can be risky, but also it can also pay off. The growth rank is extremely high. Here we can look at the net earnings, We look at the revenue, the net income, and we can see that over the years it increases, which is a healthy sign. And yeah, we can see it's a profitable business. They have 13% of net income from the revenue left every year. So that's pretty good. Right now, PayPal is trading at $70. But is that cheap or expensive? That's why we fill in all the information in this intrinsic value calculator based on owner's earnings. So owner earnings is what's left for the stockholders. And we discount all the owner earnings from future 20 years cash flow. We discount it to present value. And then our final intrinsic value. We divide it by the amount of shares, and then you have the intrinsic value per share. Here we can see that the net income is $4.55 billion, which I use most of the information I find here on TradingView, which I really like. Net income is here $4.55 billion. So I filled in everything. And here, this one is really important, the earnings growth rate in percentage. So how fast can this company grow? For example, on Finviz, we can pay here PayPal. And we can see that next 5 years, it's expected at 11.26%. In the past 5 years, it grew at 14%. So 11% for 5 years, and after that, half to 10.5 to 5% for the last 15 years. It's very conservative, I think, and also very realistic. So if we go back, we use a high discount rate of 8% because this is a more risky stock, and it doesn't have a really strong economic mode. It's a narrow mode. So let's calculate the intrinsic value here. And we can see that it's very undervalued according to this calculator. The earnings, this is the total intrinsic value, and the intrinsic value per share is $171. So here you can see the calculation for the 20 years. It's undervalued by 58%, potential upside 143%. The intrinsic value, 167 billion, is significantly higher than the market cap, which is only 70 billion at the moment. So the total intrinsic value per share is $171. So let's go back to the chart right now. You're now looking at the PayPal charts. It's now trading at $70, and here's our true value per share that we calculated in the intrinsic value calculator. And it's 171.17. So if it goes from here to here, you make 140%, which is great. Yeah, it's the same price as like 8 years ago. So it's looking really cheap right now. But the problem with PayPal is that its economic mode is not as strong, which makes this company a little bit more risky. There are a lot of other companies who can do the same and who are competing in the same segment. But I believe that buying right now gives you a good risk reward. So if you risk like 2% of your portfolio, you can easily make 4, 8, 6. It can really go up like this. I will not allocate more than 4%, and I will just start now with 2%. And then you can average down or average up, what you will prefer. So yeah, I think this is a great opportunity that gives you a good positive risk reward, and I believe you can ride this whole wave up, and then once it gets overvalued and it comes like around here, around the tops, then you can start selling again. I hope you enjoyed this video. Thanks a lot for watching, and I'll see you in the next one.